everyone is searching for that one stock or that one hot investment they can buy to get rich, but it doesn't work that way. And on this video, I'm gonna explain why, but I'm not gonna leave you empty-handed, okay? I'm gonna show you a simple system you can follow to build the wealth you need to reach your dreams of sending your kids to college, for your own retirement or whatever, so stay tuned. All right, welcome back. So we're gonna talk about the one stock that can make you rich. And I hate to break it to you, but that's not exactly how it works. Now, it's sensational. The headlines get everybody chasing the next big thing. And we hear stories of Uber or Lyft. And if I would have just got into Uber or Lyft early, I could have made all this money. You know, newsletters are coming out talking about cryptocurrency, the next hot thing, which I've talked about a lot, and we'll get into that. Pot stocks, you know, cannabis is the new thing, and you can turn a small amount of money into your retirement savings, or it's this new gold, gold or silver, or this new way to invest into gold, or technology like 5G, if you can get into 5G early, or artificial intelligence or whatever. And so everybody's chasing the next big thing, thinking that if they can just find the right investment, they're gonna get rich, all right? But unfortunately, I hate to break it to you, but that's like gambling, all right? That's what gamblers do. Gamblers go to Vegas, they put it all on red or black or whatever on this one hand, and they want to get rich from that one game, whether that's be, football or whatever. And I'm sure we all have friends. I know I have plenty of friends. I'm pretty close to Vegas, so they go out to Vegas and they gamble a lot, or they like to play, they like to bet on football over the weekend. And I have these friends, and they get comped everywhere they go because they spend a lot of money there, and they have all these stories of how much money they made on this one bet, this one game, this one night. They don't tell you about all the losses that they've made. And so, it's easy to look at, this pot stock, cannabis, 5G, whatever, and we made all this money. But at the end of the day, how much have you lost? How much have you made? And what have you net, right? What's the gain net, right? So I want to tell you, first of all, that stock picking, as it's called, right? So selectively trying to pick that one investment that's going to make you rich, it just doesn't work. Now, it doesn't work for me. It doesn't work for you. It doesn't work for the most advanced, most professional traders in the world. 90% of active money managers cannot beat the market. They can't beat like an index of stocks. Large cap funds, over a 1 year period, they've come up 56% short. Over 5 years, they've come up 82% short. As a matter of fact, a study that was done from 1975 until 2006, 99% of active managers, meaning they're stock picking, have failed to outperform. And these are professional money managers, and they have not been able to outperform. And that's because it doesn't work. Now, in my own experience, I said I'd come back to cryptocurrencies. For the last 4 years, I've been writing a newsletter for cryptocurrencies. Once a month, putting out deep research, talking about the market, the specific coins that we should be buying and when and so forth. And we've got a lot of people in it. It's probably one of the most recognized newsletters in the space. And we have had so many winners. We've had over 20 different calls that we've put out that have gone up over 1,000%. 1,000%. We've had some calls go up as much as 25,000%. One of our calls went up 68,000%. I mean, it was just amazing. An amazing track record. That newsletter did awesome. But the problem is that people weren't taking profit. Yeah, we'd put the call out. Yes, some people would buy it. Yes, some of the people would actually get those profits, but they didn't take the profits. They didn't take the money. And worst yet, most people got wrecked. So what happened is they didn't have a good system. They thought, oh, cryptocurrency is my way to get rich, so I'm going to put all my money into that call. And it went up and then it went back down. They didn't take their profits and now it went down. And what happened is people over invested. They got too much money into cryptocurrencies, too much money into one of these positions. And then when it dropped 90%, they got completely wrecked. They held on, they didn't take profits at the top, and they got completely wrecked. And the reason why that happened is not the cryptocurrency or the call's fault. The calls went up 25,000%. The reason why is because you need to have a system. You need to have a system to be able to balance the risk and adjust for the risk at the same time. Before you buy something, you need to have your exit plan already there. And so, like I said, a lot of these people didn't take profits, all right? They didn't have a plan when they entered to take profits at the top. They also got wrecked because they either over invested into that area, they didn't balance the risk properly, and now it's wrecked their whole portfolio. Nobody investing into any one of those things I've mentioned, crypto or cannabis or 5G, should ever get wrecked, because you should never put enough of your portfolio into one of those to wreck your total portfolio. So what you want to do is you want to balance the risk around. You need to adjust the balance by the amount of risk. So for example, something that's safer, like a bond, for example, could have way more money. Something that's riskier, like a cryptocurrency, needs to have way less money. That way they each can affect your portfolio in a different amount. Now they're asymmetric, right? So the cryptocurrency, although it's a lot more risky, it also has way more upside. So I can do a smaller investment there, so the risk is not going to wreck my portfolio, but because it's asymmetric, meaning there's more upside than downside, it means when it does go up, it can dramatically increase my portfolio, even though the risk-adjusted amount is really small. The other thing about having a system is taking profits. You need to be able to take profits. Like I said, there was many people who made 25,000%, 68,000%, but they didn't take the profits. And I've heard from a lot of you I think on my last video, I got a bunch of comments about this, and they said, one of the lessons I've learned is that I didn't take profits at the top. If you go back, it was my financial mistakes or whatever, and you'll see a bunch of the comments where people saying my mistake was in the cryptocurrency boom, I didn't take profits, and I'm going to do better next time. And I replied to all the comments, by the way, so leave me comments down below and I'll reply to them. But I said, why? How are you going to take profits next time? How are you going to know when it's the top? How are you going to know? And most of them didn't have clear answers. They don't know. You need to have a system going in, and I'll tell you what that system is. I'm not going to leave you empty-handed. So what you need to do is you need to divide up your assets. Now, I only like 4 areas. You can see the picture on the screen here. This is like what a professional asset manager would do. Super rich guy. If you hire some fancy financial advisor, they're going to set something up like this for you, and that's just crazy. All right. I only like 4 areas. You only need to focus on 4 areas. Forget this stuff. And you need to balance it so you get the upside that's left in the market, but you're also ready for the downside. And then what you do is, once you've figured out what that portfolio is, you rebalance it. All right. When you rebalance it, it forces you to take profits. All right. So for example, if I said, okay, I'm going to put 10% in cryptocurrencies, by the end of 2017, by 2018, that had maybe grown to 40% of my portfolio. I don't know, 50% of my portfolio. So what I would do, I would rebalance that portfolio, take that extra 40% that had been owned, or gained, I would take that off and I would apply it to the other areas of my portfolio. So I would have taken profits and I would put it into gold. I would have put it into real estate. I would have put it into, other passive cash flow, whatever. And so then when the cryptocurrencies came down, well, instead of now 40% of my portfolio, I rebalanced to 10, and now instead of 10, it's only 2 because it crashed that hard, dropped 80%. But my gold, my real estate, all those other things are there. And actually those assets have gone up. Gold's up 20% this year. So if I would have taken profits out of my cryptos and put them into gold, I would be up instead of down. And it's really easy to say, oh yeah, I'm going to take profits next time, but you're never going to know when the top of the market is. And so by having this plan in advance and by rebalancing on a regular basis, it forces you to take profits. That's what I'm talking about. It's a plan. Now, in order to do this, you're gonna have to take control. I've said it before, it's crazy that we spend so much time learning how to make money. All the schooling and specialty schooling and continuing education and universities. And then we work, so much at our job. All this to make money, but we don't spend any time or hardly any time worrying about what happens with the money after we make it. So take a little bit of control. Financial advisors are not on your team, all right? Like at your company, you have this 401k and, they have this mutual fund manager and he's gonna help you with your money. They're not on your team, okay? They do not have a vested interest in you. They make money whether you win or lose, right? They're charging you so much fees that it's almost impossible for you to make money. And whether you win or lose, they're making money. So they don't care. They don't have a vested interest in you. And really, they're just sales reps, right? They work for that company, they sell that company's products, right? They're towing the company line. Now, what they're always going to do is they're going to reference the historical average over the last 80 years, as you can see up on the screen. Well, they're going to say, well, over the last 80 years, we've averaged an 8% gain. So if you just put your money into these stocks over time, you're going to average 8%, but that's not going to work. All right, that doesn't work. Now, as you can see on the chart here, you can see it looks like it's pretty much gone straight up for the last 80 or 90 years. There's a few reasons why it's done that. One, we got off the gold standard. We've printed more dollars. We've inflated the economy beyond any imaginable thought that anybody could ever think of. And we've pushed asset prices sky high, all right? Now, it's not going to continue, right? We've talked a lot about this. If you've seen I'll put the link up here for the end of the dollar. You see the problems that we're facing right now. We are facing a complete reset, all right? The entire financial system is going to be reset. Now, I'm not saying it's happening in 6 months. I don't know if it's going to happen in a year. I don't know if it's going to happen in 3, 4, 5 years. We don't really know. We don't know timing, but we know it's going to happen, and we know it's not going to be another 80 years like this because it can't. We've pushed interest rates all the way down to zero, which we thought was going to be as bad as it could get, and now interest rates are below zero. It's just crazy. So the financial system is going to be reset. So these guys that are saying, oh, the last 80 years it's been like this, don't use that as information. All right, the future is going to be different than the past. And so you need to take control and think of it like a football or like a baseball team, basketball. So think of like football or basketball. Football and basketball, basketball is a pretty good example because they have everybody on the court at one time. And basketball has an offensive and they have a defensive, okay? And they're running to make offensive and they don't know if that team's gonna strip the ball or what's gonna happen. And so what happens is, even though they're playing offense, they're leaving people back for defense. That way, if someone strips the ball and passes it back, they have defenders back there. And then, if that happens, they're able to pivot really quickly and instantly go from offense back to defense. All right, and we need to take control of our finances and look at it the same way. We need to be pushing forward for offense to make money, but we also need to be ready on a moment's notice to switch and go back to defense. But we want to play both sides just like the basketball game will. Now, it doesn't have to get overcomplicated, and this is what I really want to just drive home. I'm going to show you guys this, so stick around to the end. I'm going to show you how to do this. I'm going to give you a free resource. If you like this, give me some thumbs up on this video. All right, now I want to keep it simple. So KISS, this is a management term. So I've owned lots of businesses and I've managed huge teams, and so this is a management technique, and KISS stands for keep it simple, stupid. That's it. Keep it simple, stupid. All right. Don't overcomplicate things. We want to keep it basic. All right. And I'm going to show you what that is. So I like to say, like I said, I like to think of 4 areas that I want to be in. I call these the 4 pillars. All right. This is how we're going to maximize for growth right now because we don't know if the market's going to crash in a year, 2 years, 5 years. So we want to stay in it for growth, but we want to be ready like a basketball team to have defense ready to go and be ready to pivot. So I want to have growth. I want to be positioned for growth. This bull market still has some legs. Maybe there's another 30% or more. We don't know. So I want to be positioned for growth. All right, those would be like index funds, so I can still be in the stock market, equities, cryptocurrencies, which has still another good run if you balance the risk properly. Other types of ways we can get growth. Income. I want to have income. Income for me is a really big piece, and so I want to have real estate pays me income, rental properties. I can invest into like stocks that are like REITs that are like basically investing into real estate, other dividend-paying stock, bonds, and I want to have income. All right. The thing with income is even when the markets crash, the income still continues to come in there. Cash, I want to keep cash because when the markets crash, and it could be 1 year, it could be 5 years, but when they do, it's going to be the sell of a lifetime. I want to make sure I have cash to take advantage of those, but cash shouldn't be sitting just dormant. You need to have it at least at a minimum in a high yield savings account, some type of a money market account, get up to a couple percent, treasuries, things like that. There's ways you can get up to 8 or even 10% on your cash and keep it liquid. I'll tell you more about that later. Well, check it out in the guide down below. We'll get to that. And then the 4th area is I want to have insurance on my portfolio. And what that means is I'd buy things like gold or silver. I could do options on my positions and stuff like that. And that way I have insurance. So a little bit of insurance, a little bit of cash, more income, more growth. These 4 bubbles there, the size can vary depending on how you want to position your own portfolio. That's a lot, I know. There's a lot more to it, but if you want the shortcut to success, I have a free guide and you can find it in the link down below. Just download it. It's like 20 pages because each of these areas I'm really going too deep on, and I'm really going to explain how you can do this. And I give you some sample portfolios so you can build your own out, so you can figure out what risk level you are. And then On top of that, I'm gonna do a free training that I'm putting together in a presentation. So download the guide and then check out the free training I'm putting together. It's gonna be like an hour long. Also, I put together a Facebook group so we can discuss all this. The reason why I'm so passionate about this, as I've told my story a bunch of times, is that I didn't understand this and I lost it all. I had a huge portfolio, I lost it all, and it took me a long time to figure this out and rebuild. It's been over a decade now, and I spent my life figuring this out, and I was able to rebuild, and now I have a solid foundation, and now I want to teach it to you guys. And so that's why I always talk about this, because it's the most important rule for success with investing. So shortcut to success, learn from other people. Download the guide, check out the free training. Give me a thumbs up on this video if you like it. If you don't, give me some thumbs down. But either way, let me know what you're thinking, and that's it. To your success. I'm out.